Good afternoon. Ira Epstein of Linn & Associates with your market wrap-up for your SPDR ETF videos for this Tuesday, and we are now at April 28th, 2020, about 4:35 in the afternoon. I can tell you this, I decided to see what my subscribers, remember I put out this and then I have a subscriber video for SPDR ETFs, which is a lot more detail, covers many more charts, covers 27 of them, and the real buy and sell recommendations. And I'm wondering if my subscribers want me to put out one in the morning in lieu of the afternoon, and here's why. SPDRs, ETFs, a lot of them, not all of them, but a lot of them count on what the stock indices are doing, what the currencies are doing. If you're watching the FXY, the FXB, or the E, the Euro, TLT is going to look at the bonds and the notes. Well, those are futures markets. And they trade 23 hours a day. Sunday night they begin and they end 4 o'clock on Friday, but it's 23 hours. They only close 1 hour from basically 4 to 5 o'clock. Then they gradually are reopening and they're humming. And I'm just wondering, being new to this area for you, what would fit better? And I'm asking the people that are doing it, and I'm having a ball. I did 2 of them today for each. I'll probably do that another day or so, and then that's it. That is why I didn't put out this morning my morning flash video. There's only so much of me, folks. I can only do so much here. I'm home. My wife has projects. Being home is a little different, right? So we're in earnings season. We're at the point where we're waiting to see what the FOMC does today and tomorrow. Remember, tomorrow we get at 1 o'clock the announcement. Then at 1:30 the press conference. The European Central Bank comes out with their Riksbank has come out of Sweden. They didn't do anything, but what should they do? They're at 0% interest rate. We know the Bank of Japan through the kitchen sink, and they're buying bonds like there's no tomorrow. They're going to triple their holdings. So there's questions as to what can be done. There's already pressure, as you know, from the cities and states to bail them out. It's not going to happen the way that they think. There is no one in my state of Illinois, nobody in Washington is going to say, we're going to help you out of your pension plan nightmare that you got yourself into, that nobody addresses in Illinois. So that is not going to happen. They might offer New York, they might offer Chicago, other cities some money for the COVID part of it, but certainly not to bail them out of the other messes that so many cities are in. Okay, let's go to a chart. Here's our tech sector, and you know we had today earnings from Google. Well, we had, which is not a tech company, Starbucks. We've seen Ford this afternoon. You're going to keep getting all this. But this is the week of the big techs, and at the end of the week, we're going to start seeing the energy companies. The market again went up and challenged in this the 62% retracement area and failed there. This is an outside day down. Now, if it takes out today's high, I don't think the Fibonacci count works anymore. Not for this chart, then it's run its course. Fibonacci counts are great, but that's what I would think. If I'm right and the market's peaking here, it should get interesting from this point. So now the game's on as far as I'm concerned. The chart action, bullish. You've got still the swing lines, higher lows, higher highs. You hit the 100-day average. So now we've seen 2 numbers. You hit the 62 percentile retracement and the 100-day, and we're finding both numbers are holding the market back. We then look to see where the Bollinger Bands are. Well, if you clear this high, I don't see anything on the chart other than getting up to 92.59, assuming the move continues on. Where's momentum? This could be the fly in the ointment. I want you to look at what happened here. Let's take a look at yesterday. Both numbers were over 80. The day before, both numbers were over 80, not the day before. This market needed today to have both numbers settle over 80 to get what we call embedded. Convert it to saying, we're ready to sail, ready to move higher. Instead of that, it didn't do it. That means it can't do it for another 3 business days minimum. And what that also means is it puts more reliability on this resistance area. There's nothing bearish here other than momentum has said, I'm not ready to go with you. In SMH, which is the U.S. Semiconductor 25 Index, if I ran the numbers, it's going to be about the same. This 100-day average is doing it there. What about momentum here? I can just look at it. You didn't embed. So that is a warning sign that this market's had a nice run up, but it just wants to stay overbought. How do you correct overbought? You either embed, which it's refusing to do, or you break to get the numbers away from that. We'll see. XLI, the industrial sector, this is a get out of Dodge number. What do I mean by that? Well, I'm not a cowboy, although I did go to college in Arizona. You can see where the market's up, 6,500, the resistance zone, and you got close enough. You had 6,501. I think the smart money took money off the table today and they said, okay, let's get this earnings behind us. The trend is up, but we're in this sideways action of a resistance and we're overbought. There's nothing bearish. There's reasons to be out of longs. There's a very big difference between the two statements. The same in the energy sector. Overbought up to, let's see, you hit 3640. Today, the upper Bollinger Band is 3651. You're right at that zone. You don't want this market to start backing off. In my opinion, I think the pros are wanting to take some money off the table. In the QQQ, this is a failure day today. You make the highest high of the whole move, and you have an outside day down. Outside day means you took out the previous day's high and low. You closed lower on the day, and this market did all that. So again, the 100 in green day average of closes might be where this market wants to fight the battle. So far on the way up, it sort of stymied the move. On the way down, will it support it? If not, then it's the 18. But if you take out 209.50, be careful, because that means you're probably going to lose the Bollinger Band. I'm sorry, the slow stochastic that's embedded. I said it wrong. If that gets under 80 on a close, the odds favor we're going to come down, at least I would think, into this 18-day average. I say that because I think you'll give ground very quickly then on the 100-day. It's just a guess. Am I bearish? No. I don't have any reason here to be bearish. I have reasons not to be as bullish. Does that make sense to people? Emerging markets, out of Dodge. You're close enough. You've had this run up, first challenge, and you didn't do very well in holding it. The market's overbought, never did embed. That's what I think there. GLD, you pulled back to the 18-day average, and you held it. You got as low as 159.16. The number's 159.19. So we have a pattern of a higher high and a lower low, and the market is refusing so far to stay under the 18-day average. In addition, even if it did get under it, you don't have a bearish pattern here just yet. So this market, it's working off a condition that got overbought by coming down. See, that's what I mean. You either embed or you come down out of overbought. And I think momentum's saying the market wants to lead the way down. Does it mean I'm bearish? It does not. It also means I'm not bullish right here. In the gold miners, inside trading day with an embedded reading, the market is still fully bullish. You've got to lose this embedded reading to get me to the point where I say, we're going to make a run back to that 18-day average of closes. Do I think there's profit taking? Absolutely. You got up to the upper Bollinger Band. I think the pros have already lightened up and they have fairly tight stops in this market and they're watching. If gold lets go, how are you going to keep the miners up? And by the way, when I say gold let go, I'm not saying it's going back to $1,400. That's not what I'm saying at all. I'm saying a correction. TLT, you're caught in this neckline. I want you to think of this as a bottle that melted. Here's the bottle. Got your labels through the center. It's the 18-day average. Price is right here. And you're stuck in the neck as heat's going in it, and the market is now trying to come out of the cork one way or the other. That's what's going on. It's the best way to explain it. And we don't know which way it's going to go. The market's fighting itself. You've got the swing line down, the bias up, trying to correct an overbought condition in a tight neck. In FXE, the line in the sand, that 18-day average, stymied this market today, didn't get very far. Now the futures look different than this. The futures had an outside day up. That's why I love to tie the two of my advisories together. When you look at the futures, if you're trading these, it gives you the ideas to what's going on in it. But this market's still very much in a downtrend that is oversold. So do I think the pros are going to be aggressive on the short side? Not in an oversold condition. So I don't have all the elements that I like there. You put it together, you try to come up with game plans, and that's what I do. So as I said, what I've begun doing is I'm now asking the subscribers, and we're picking up subscribers every day. This is a paid-for service. It's totally inexpensive. $8.95 for 30 days. So it's not as though, that's $8.95, not $895, although I'm worth that. When you look at this, you're going to get my trade ideas, and I say each afternoon. Today I began in the morning. I have every intent of doing another one in the morning, and that'll be it. 27 charts on SPDR's ETF markets. I added another one. I added UNG because I happen to think nat gas is going to get very interesting here. I give entry ideas. Buy here, sell there, what I think you should do. Don't talk general trend like I do here. How do you find out more? Well, this is what I'm covering. And as I said, I'm adding UNG right here, so that's going to add more to your arsenal. But I cover all these markets for you. And as I said, I'm trying to figure out the best time for my subscribers. I will work around what my subscribers think is the best way for them to go. But I'm not going to do 2 a day, that is for certain. So which way do we come with it? Well, as I said, the introductory price, and there's no contract. You're not signing anything where you're in trouble there. It's $8.95. Believe me, this video is about 20 minutes long, 15 to 20 minutes long daily. You get your money's worth. How do you find out about it? Go to our website at www.iraepstein.com. Under the word research, it's all explained there. I'm Ira. You have a great day, and I will talk to you tomorrow. Take